A moving average is a technical analysis tool that captures the average change in a data series over time. Today I'm going to show you how I use moving averages. There are two different types of moving averages. There's the SMA, which is the simple moving average, and then there's the EMA, which is the exponential moving average. A simple moving average, SMA, is a calculation that takes the arithmetic mean of a given set of prices over the specific number of days in the past. For example, over the previous 10, 20, 50, or 200 days. Exponential moving averages, EMAs, are a weighted average that gives greater importance to the price of a stock, crypto, or future in more recent days, making it an indicator that is more responsive to new information. The EMA gives a higher weighting to recent prices, while the SMA assigns an equal weighting to all values. Now that you know the different types of moving averages there are, now you have to determine which ones you're going to use and how you're going to use them. I like to use SMAs. When I look at moving averages, I like to keep things really simple. How strong or weak is the current trend? And because I'm really more of a short-term to medium-term time frame, I only use the 5, 10, and 20-day simple moving averages. Let me show you how I use the 5-day moving average. I pulled up an E-mini S&P 500 daily chart on NinjaTrader. Now, I use the 5-day simple moving average different than how I use the 10 or 20-day simple moving average. The 5-day moving average for me is a tool that I use to help me stay in trades. Basically, I'm using it as a way to trail my positions using stops. So the 5-day moving average is too short to determine how strong or weak a trend is. So if I'm in a position, a multi-day position, and I want to try and hold that position for as long as I think that trend will work, I like the 5-day moving average for that. Let me show you some ways how I would use the 5-day moving average. This is a chart going back to the beginning of 2022. And in this example right here, you can see that the market was getting below the 5-day moving average and we had a steep sell-off. If I was in a short position and I thought that the market could continue to go lower, I would pull up this 5-day moving average and I would just put my trailed stop just above the 5-day moving average. You could see it eked just above it right there, but then it got back below it. Once it started to get choppy right around the 5-day moving average there, obviously if I was short, I would use that as my trailed stop to get out. So really the 5-day moving average is just a gauge to help me stay with a short to medium term trade. It's not telling me how strong or weak the trend is. It's just trying to help keep me in a position. Another example would be here. Look at this at the end of March. We had this rally off of the lows and we started to hold above it. If I was in a long position, once it got below that 5-day moving average, that would be a signal for me just to get stopped out as a trailer of my position. So that's how I use a 5-day moving average. Super simple, just a tool to help me with trailing stops. Now I pulled up a daily chart with the 10-day moving average. Now I use this differently than I use the 5-day moving average. Remember, the 5-day moving average was just to trail stops. Now the 10-day moving average helps me determine how strong or weak a trend is. Let me show you an example. Beginning of the year, when we were staying below the 10-day moving average, I'm only looking at shorts. It gives me that 2-week time frame of average price, so it tells me if we're staying below it, that the trend is lower. It's as simple as that. Whether I'm trading intraday scalping or I'm trading multi-day swing trading, because my time frame is only a few days to maybe a week or 2 weeks, that's why I like the 10-day moving average, because I only want to know 2 weeks back, what's that trend look like? And when we're below it, I'm bearish. If we're above it, I'm bullish. If you look here, we were above it at the end of March. And if we're just chopping around it, then I'm really in a no trade scenario. Now I added the 20-day moving average in gold, and I use this as more of a confirmation of weakness or strength and trend on my multi-day swing trades. I really like when the market is below or above a 10 and 20-day moving average to give me confirmation of strength and trend. The 10-day is mostly used for my intraday to really maybe a day or two trades. The 20-day just gives me that extra confirmation if I'm going to look at something maybe in the options market a week or two out. I like to see that it's above or below it for determining strength or weakness in trend. Here we go back to the beginning of the year, below both the 10 and 20-day moving averages. And look at this time frame right here. To me, that's key. Because when we're chopping around the 10 and 20-day moving averages, I don't have a clear view of direction. This is one of the most important things that I like about having moving averages up, is that when I see us just chopping around a 10 and 20-day moving average, I know in my time frame that intraday it's going to be choppy because neither the bulls or the bears really have control, and we don't have clarity of strength or weakness in trend. And you can see that when we get really sloppy around them, almost like the spaghetti getting tangled up, the market gets very choppy. But when we're above both, the trend is pretty clean. When we're below both, the trend is pretty clean. So you see, using moving averages, they don't need to be used for entries like a lot of traders will. And this is totally a preference. I like them just to help me determine what side of the market I want to be on. I think that too many traders are trading too much and trading both sides of the market in a market where maybe in a scenario like this, they should only be trading short. Or in a scenario like this, they should only be trading long. I like to cut through all of that and say, what do these moving averages tell me about the strength or weakness in trend to help me determine the direction I'm going to be trading on my time frame? To summarize how I use moving averages today, it's really personal. Like with any indicator or tool out there that you use, it's personal on how you use it in your trading strategies. For me, I like to keep things super simple when it comes to moving averages. I don't use them for price entries. I use the 5-day as a way to trail my stops if I'm in a swing position. I use the 10 and 20-day simple moving averages to help me gauge trend, whether we're going to be in a strong market, a weak market, or a choppy market. This is very personal. There are tons of ways to use moving averages. Hopefully what I share with you today will help you in your trading. Micro copper futures are now live at CME Group. The symbol is MHG. They are 1/10 the size of the larger contract, HG. To learn more, go to cmegroup.com. I put this tweet out the other day that got a lot of people talking on social media. One of the reasons being a successful trader is so hard is because you have to have the ultimate belief in yourself. Failure occurs on a daily basis, and it's not easy to get over it. We have to heal quickly, have short-term memory for some things, and never forget other things. I put this out because, let's face it, these markets lately, I've been very open and transparent about it on Twitter. Good, bad, good, bad. It's been a lot of up and downs for me, and I look at myself and I say, I'm dealing with these failures on a regular basis, right? Have these plans in place, you go in, and the market makes you look brilliant in one moment and then dumb in the next. And you just have to get over that as traders, especially in an environment that we're in right now. It's so important, really. I know a lot of people will say, just stick to the process. Don't look at the results. It's easier said than done. I know when I'm swinging back and forth, it's not the easiest thing in the world to do. So I want to just put a message out there to say, have that belief in yourself. Have that short-term memory. Click that button to get out when things aren't going well. There's always going to be another opportunity tomorrow. Traders, I want to hear from you. What moving averages do you use? Let me know in the comments down below. Never miss an episode of Develop Your Edge. Click that subscribe button right there. You could also DM me on Twitter. My DMs are open at Anthony Crudele. Don't forget to check out Instagram, Anthony C. Crudele. And now I'm on TikTok. Check me out at Anthony C. Crudele there. That's it for today. See you next week.